All right, let's talk about sales agency accounting. But we're not just going to cover it. We're going to install it directly into your long-term memory. This isn't about passing one quiz. This is about making sure you absolutely nail this topic on the LECPA, even if that exam is 3 years away.
I mean, that's the real challenge, right? For real, how are you supposed to remember hundreds of accounting topics for years and then poof, recall them perfectly on exam day? It feels impossible. It feels like you're fighting a losing battle against your own brain.
Well, there's a reason it's so tough. Meet your arch nemesis, the forgetting curve. It's a scientific fact that we naturally forget stuff over time. But, and this is a big but, you can fight it. You can actually flatten that curve. And today, this is our weapon. We're going to learn this topic in a way that's specifically designed to make it stick.
So, here's our game plan. First, we'll quickly talk about why just cramming doesn't work. Then, we'll lock in the one golden rule that makes this whole topic click. After that, we'll walk through a case study, the working fund, sales, expenses, the whole shebang, and we'll finish up with a super condensed retention kit that you can use later. Let's get into it.
Okay, so the LSCPA is a marathon, not a sprint. It covers years of material. Cramming might get you through a quiz, but for the boards, it's a total disaster. Your brain just can't hold that much info in its short-term memory. To win, you need a new strategy, one that's all about deep understanding and long-term memory. And that starts with building what we call mental models.
So instead of trying to memorize a bunch of random journal entries, we're going to build one simple, powerful idea, a mental model. It's like a master key that unlocks all the problems. If you get this one idea, everything else just falls right into place. No memorization required.
First up, the official textbook definition. A sales agency, you can think of it like a showroom. They show off the products, they take orders from customers, but they don't actually have any inventory to sell. And that last sentence, that's the most important part of this entire topic. It is not a separate accounting entity.
To really get it, let's contrast it with a branch. You've probably studied branches already. A branch is like its own little mini company. It has its own accounting books, it holds inventory, it has those special reciprocal accounts. An agency? It has none of that. No books, no sales inventory, no independence. It's basically just an extension of the main office.
And that brings us to our golden rule. Seriously, screenshot this. Write it down. Get it tattooed on your brain. An agency is just a remote sales rep with a fancy office. It is not a mini company. Every single thing that happens, every sale, every peso of expense, is all recorded on the home office's books. This one idea is the key to everything.
All right, enough theory. Let's see how our golden rule actually works in the real world. We're going to jump into a quick case study, just like a problem you'd see in your review materials. Here's our mission briefing. The home office gives the agency some cash, the agency gets some sales orders, there are some expenses, and we know the cost of the goods sold. Our job? Track all of this and figure out the agency's net income. Simple enough.
Let's kick things off with that first transaction. The home office sends 5,000 pesos cash over to the agency. Now, this isn't revenue or a sale. Think of it as just seed money, a little cash fund so the agency can pay for small things like office supplies or maybe some transportation.
And here's your first LECPA brain hack. Do not think of this as some brand new, complicated topic. The agency working fund works exactly, and I mean exactly, like a petty cash fund. It's the same impressed system. You already know how to do this. See? By linking it to something you've already mastered, you make the memory 10 times stronger.
Okay, let's follow the money for the rest of these transactions. And as we do, just keep repeating that golden rule in your head. The agency is just a sales rep. It makes things happen. But the real accounting action, that all goes down back at headquarters.
So check out the flow. Step 1. The agency is basically a matchmaker. It gets 50,000 pesos in orders and just sends the paperwork to the home office. That's it. No journal entry needed from the agency. Step 2. Now the home office takes over. They approve the sale, they ship the goods, and they record the 50,000 in sales and the 36,000 in cost of goods sold. Step 3. The agency uses its little working fund to pay for 2250 in minor expenses. And Step 4. The home office records its own expenses of 4,500, and this is key. It also records the agency's 2250 of expenses when it sends more cash to replenish the fund. See the pattern? Who's doing all the accounting? The home office, every time.
Okay, so we've got all the puzzle pieces. Now the home office wants to know, hey, is this agency actually worth it? Is it making us money? Let's run the numbers and find out.
And the math here is actually super straightforward. The home office just takes all the sales that came from the agency. That's $50,000. They subtract the cost of those specific goods, $36,000, which gives us a gross profit of $14,000. Then they subtract all the expenses tied to that agency, the $4,500 they paid directly, plus the $2,250 the agency paid from its working fund.
And there's our answer. This agency generated a net income of 7,250 pesos for the company. This is the number that matters. This is the report card that the home office uses to see if the agency is doing its job. And notice, it was all calculated centrally, using the home office's own records.
Okay, we've gone through it, we've broken it down, and now we lock it in. Get your phone out. I'm serious. Get ready to screenshot this next slide. This is your high-yield summary. This is your cheat sheet. Look at this once a week, and you will not forget this topic come exam time.
Let's do a rapid-fire review. What's the golden rule? An agency is an extension, not an entity. Who does the accounting? Home office only. What's a working fund just like? Petty cash. What are the key entries? Debit accounts receivable, credit sales. Debit cost of sales, credit inventory. Debit expenses, credit cash. And the net income formula? Sales minus COGS minus all the expenses. That's it. That is the entire topic on one single slide.
So look, we didn't just learn agency accounting today. We learned a method, a way to fight that forgetting curve by building a simple mental model that makes a topic stick. So the real question I want to leave you with is this. What's the next topic you're going to build a mental model for? What will you master next?